Good morning and welcome to Broker Briefing, Australia's premier digital platform for brokers and investors, live streaming video presentations from ASX listed companies. I'm Jane Morgan and thank you for joining me today for our May Tech and Biotech Investor Webinar. Today we'll be joined by four companies: Pivotal Systems, Limeade, Argenica Therapeutics and Archer Materials. Up first, we are joined by Pivotal Systems with the ticker code PVS, a company that provides the best-in-class gas flow monitoring and control technology platform for the semiconductor industry. To tell us more about their projects, today I am joined by Chairman and CEO John Hoffman. Good morning, John.
Good morning, and thank you very much for the introduction.
Let me bring up your presentation.
Thank you. Let's roll ahead to slide 3. First off, Pivotal Systems is involved in the global semiconductor production industry. We'll speak specifically about the excitement in this industry and some of the things that are continuing to move this industry forward. For further information about Pivotal, you can go to our website, www.pivotalsys.com. We have an investor tab in which all of these presentations are there for your review. Let's go to the next slide. We participate in the global electronics market. Currently, that's about $350 billion annually. The latest information we're seeing from various industry consortiums show that's going to $1 trillion by 2030. This industry is very complex, but it all comes down to the devices you see there in the center of the picture, which is a semiconductor. Those are absolutely across all bits of technology we see in the world today, and it's growing at a very, very fast rate. A deep dive on that shows a typical semiconductor factory. This one is a Samsung factory in Seoul, Korea. These generally cost between $7 and $14 billion US to construct. They take sometimes up to 3 years to fully populate them with equipment. Below it, it shows a typical aisle inside one of those factories. There can be 400 different production tools running, and you'll notice there's not a lot of people. The semiconductor wafers themselves are managed by track systems, which is the overhead trolley you can see. And thus, we try very hard in the industry to not let various contamination get across these wafers because it will affect yield. And one of the biggest contaminants are people. On the top right, you'll see a typical semiconductor tool. This is an etch tool by Tokyo Electron. This is a 6-chamber tool for production. You see 3 chambers on the left. On the front are 3 load lock chambers that move the wafers in and out of the tool for production. And then finally at the bottom, that's a gas panel. This one happens to be populated by Pivotal gas flow controllers. Each production chamber on each production tool would have a gas panel around this type of configuration. And so on a typical tool, there's about 80 different gas flow controllers utilized. So as you can see, we're a piece of a very, very large and growing market. Let's go to the next slide. One of the things that we're seeing right now is that there are 34 different production factories in some state of being built or adding equipment. And now in the future, we're seeing governments beginning to say that semiconductor production is core to their overall defense strategy or their core capabilities as a nation. And now they've come up in the last year, there's over $680 billion US being pledged by various governments around the world to build new and more leading edge semiconductor factories. And this slide just gives you a sense of what that looks like. Let's go to the next slide. So when we look at the market that Pivotal participates in, it's about $1 billion a year in the area of flow controllers. Our competitors are generally world-class companies, Fujikin and Ariba in Japan and Brooks in the United States. We generally sell into 2 different markets, into these multi-billion-dollar semiconductor equipment manufacturers like Applied Materials, Tokyo Electron, Lam Research, AMEC, and SEMES, and they're from around the world, as well as we can sell our devices directly into some of the largest companies in the world, to include Samsung, TSMC, Intel, UMC, SK Hynix, and a multitude of others. And we sell our flow controllers both on etch tools and deposition tools. So of the 400 odd tools that are in a typical semiconductor factory, these 2 types of tools represent the lion's share. Let's go to the next slide. So why pivotal? It's very important to understand that gas flow technology affects the yield and the number of good devices that a semiconductor manufacturer can produce. Pivotal's flow controllers are the fastest and the most accurate flow controllers in the world. We're talking about the capability on our devices to measure inputs at the millionth of a second, to control a valve at the thousandth of a second, and the ability to control that valve to a nanometer, or 1/100th of a human hair. And we're doing this with the latest and greatest technology, of which we have about 36 issued patents and about 389 claims. Why is that important? If a typical etch process is 10 seconds, and Pivotal Systems is turning on and turning off in 50 milliseconds versus our competitors at 500 milliseconds, we can give device manufacturers greater than 10% more output on any given production run. And there are thousands of these happening on a daily basis. When our flow controllers are more accurate, we guarantee 0.5% accuracy versus our competitors, which can at best guarantee 1%. That enables us to tighten up the manufacturing yield in order for them to get better product out of their line. So why pivotal? We allow companies like Samsung and device manufacturers to make more money, and more money can either be by more product or better product because they're getting better yield out of their factories. Let's go to the next slide. 2021 was a relatively solid year for Pivotal in this industry. Our revenue was up about 34%. Our gross margins improved about 28%, and our new orders grew at 44.5%. Our backlog ended the year with a growth of about 30%. So in an industry year where the market was overall up about 30%, Pivotal was generally outperforming that in terms of market share gains. And I'll go to the next slide, which is currently we have come back and said we will relook our 2022 guidance as we get into the second half of the year, as we're seeing very, very strong growth, but at the same time, we're seeing a lot of supply chain perturbations. And I think many people are aware of these things as you try to buy a new car, or some of the information coming out from various electronics companies. There's just a great shortage of chips, and that's why all these factories are being built. Those shortages can affect companies like Pivotal, as we have printed circuit boards and the like on all of our products. So at this point, we'll relook 2022, but it is forecasted to be, again, a strong growth year for our industry. So that's a very brief but deep dive into the company and why we're in some very exciting times. And I'd be pleased to answer any questions you might have.
Well, thank you so much for the great presentation, John. We've had a question come through, actually. So with COVID impacting upon the supply chain for semiconductors, how has the company responded to this and still achieved growth?
Yeah, COVID is really affecting us more so in some of our contract manufacturing facilities. We build our devices in Shenzhen, China, which is actually the next province over from Wuhan. So we're constantly having to manage to that and make sure that we have plenty of safety stock. So it's there, but it is something that we've been showing the ability to manage through here for the past 18 to 24 months.
Wonderful. And so finally, I saw you had some really good financials that you put out recently. So what should shareholders look forward to over the next sort of 3 to 6 months?
Great question. We again are pushing forward on this growth trajectory that the industry is driving forward to. We've got some exciting new products that are coming out that we'll continue to keep the market informed on. There's a lot of information on that on the website. So that's the net of it, which is we've got more opportunities than we have the ability to handle at this point in terms of business growth. And that's kind of where we'd like to be.
Wonderful. Well, thank you so much for the great presentation, John. We look forward to seeing further updates.
Thank you very much.
So next up, we have a presentation from Limeade with the ticker code LME, an immersive employee wellbeing company. To tell us more, today I am joined by CEO Henry Ulbrich. Good morning, Henry.
Good morning. Thank you very much. Am I coming through okay?
You are. You're perfect. Let me bring up your presentation.
Great. Thank you. Excellent. As you can see, I'm Henry Albrecht. I'll give you some nudges to move forward. Please go ahead, and of course, there are important disclaimers, and we'll start here. So welcome, everyone. I'm Henry Albrecht. I'm the CEO of Limeade. I'm based here in the Seattle, Washington area, west coast of the US. Look forward to seeing you all in person, I hope, in Sydney and Melbourne in December on my next trip down. A little bit about the company background. So we are 300 people. Founded the business in my basement 16 years ago, and now we have almost 350 people, 94% recurring revenue, software as a service business, and we're in the business of culture building. So we have well-being or wellness, which is the core of our business in the North American market, something called EX, which is employee experience, and then advanced listening, which is how you listen to your employees, take pulses and polls and surveys and keep them moving. We're largely an enterprise-focused company. Our median size business that we serve in the well-being and EX spaces is about 15,000 employees. And then in the listening space, it's more of a mid-market target, several hundred employees company. And we can move to the next slide. This is just about the technology underpinning what we do. There's science and there's technology. We know from our science that when employees perceive care for their physical, emotional, financial, and work well-being, for their life at work, how they're treated by their managers and their leaders, they perform better. They stay they're 7 times more likely to want to stay at that company 3 or more years. And we see lower burnout, lower turnover, and all the things that the modern state of the workplace demands. And so we're really excited about the demand we're seeing. I'll talk to that in a minute. And the underpinning of it is through web and app and mobile experiences in the flow of work in Microsoft Teams and Viva. We provide a whole series of activities, rewards, listening, updates, integrations, actions. Think of it as that one employee app that everyone goes to care for themselves and to connect to their company. And then a whole bunch of rich business intelligence on the back end that helps companies see how included are people feeling, how burnt out are people feeling, where's the turnover going to happen next year using advanced artificial intelligence, machine learning, et cetera. So that's the core of our product, and you can see some little screens there. Please move to the next slide. ESG, environmental sustainability and governance, is a massive trend in the investment world. And having a company that's public, that is intentional and incredibly values-based in how we build our board and our governance practices and how we care for the environment is super important to us as a company. And here's just a couple examples I'll pick out. One is, I believe that we have the most diverse board of directors, probably anywhere, but certainly on the ASX. I'd love to be called out for that if someone finds a more diverse board, and I will eat those words. Very rare amongst tech companies. Over half of our employees are women in the company, including over half the company also in management. We're in the range of 40 to 60% at every level of the company's men and women, starting from the board, the C-suite, the VPs, directors, managers, and individual contributor employees. And we give back, not just in the way we manage our environmental resources, but also giving back to the world at large. These are trends that are important to us culturally, that send a message to our people that we care about our customers and the communities we serve. And it helps our business as well. Next slide, please. And quickly about the market, it's really big, $70 billion, growing 12%, and a lot of challenges. I probably don't need to reread the newspaper headlines to you, but massive amounts of employee turnover in the US, huge mental health crisis. I heard the other day that 41% of adult workers are abusing alcohol in ways they weren't before the pandemic. And remote work is the new normal for everyone in the world. The financials of the company on the next slide. Quickly, we're this is all US dollars, by the way, so you can gross it up a little bit for AUD. High margin business, 76% gross margin, 56 million revenue, a little bit of a loss-making business, but we do have a clear path to breaking even cash flow in 6 quarters from now in Q4 2023. We're on that path. Highly recurring revenue, still lots of cash in the bank. And again, probably rare amongst a lot of health and wellness or tech companies. Our average deal size in our core business is over $500,000 a year. And even in the mid-market, it's a more repeatable $10,000 a year business. If you go to the next slide, just really quickly, I would say it's a very diverse. We'll focus on the donut chart at the left, although we all know donuts are a little unhealthy, very distributed amongst sectors. Our biggest sector is healthcare, but industrial and education, nonprofit, tech, finance, transport, all a reasonable size and a very diversified set of marquee customers. Some of the biggest and best companies in the world use Limeade, ranging in size from a few thousand employees to over 350,000 at certain customers. Next slide, please. And we'll wrap up. I know there'll be probably some Q&A. The growth strategy is quite clear. Focus on executing on the massive pipeline we have right now. We announced in our 4C a couple of weeks ago that we have $16.3 million in the last 2 stages of our sales pipeline. Next slide, in Q1, we actually signed 60 new contracts, a few larger enterprise and a lot in the mid-market, and just a huge pipeline, as I mentioned. Sorry, next slide. Thank you, moderator. Yeah. And we're a seasonal business, but now's the time when we start winning verbal awards of business and closing deals. So it's a stock that's traded at a very tiny fraction of where we were at the same rough size when we went public. And this is a sector that is absolutely ripe for growth. And Limeade is absolutely a pioneer and innovator, and we'll be having exciting announcements soon financially in the future. So very strong pipeline is probably the key takeaway here. And then lastly, I would just say thank you. Look forward to any questions and answers. Please follow up with me directly, or we have our investor relations information on the last slide. But we are reconfirming our guidance. Sorry, I got that out of order. We are reconfirming our guidance for the year. We did as at April when we did our 4C, and we feel very confident, and we wouldn't have done it otherwise. So thanks again. Look forward to your questions and any follow-ups.
I'm sorry about that, Henry. I was getting a little bit confused.
That was my fault. You did wonderful. I apologize to you.
Great presentation. We've had a few questions come through. I'm going to jump into them.
Great,
so
please.
Although the company is focused very much on the US market, are there plans to expand into other territories or other countries?
Yeah, absolutely. We have offices right now in the Bellevue, Washington area, in Canada, in Germany, and in Saigon, Vietnam. And we absolutely are a global company. We serve employees in over 100 countries, in over 19 languages. And we are absolutely pursuing large enterprise accounts right now in Australia, all throughout Europe, and in North America. Our core market is North America, but we are absolutely a global business. Thank you.
Thank you. And also, you did mention that you've sort of got the 3 different business divisions. Do you have any plans to expand that offering in the future?
I would say we absolutely think there's a lot of opportunity to add new areas. When we say employee experience, it actually covers a lot. It could be anything from onboarding and learning and recognition and health and wellness and benefits offerings, performance management, coaching conversations, listening and surveys. And we also do some cool listening with things like getting data from devices and knowing how well you're sleeping and things like that. Obviously, very careful with privacy and security there. But we see a lot of room for expansion under the umbrella of employee experience. And Microsoft has recently entered that market with their Microsoft Viva offering, saying we are an employee experience platform. And we view that as actually a really great thing for Limeade, because we can now embed our experiences into the broader Microsoft platform as well. So short answer is yes, you got the long one.
Perfect. Well, look, after the past 2 years we've had, it's definitely worthwhile looking into your business as well. So thank you so much for joining us, Henry.
Appreciate it. Thank you. Have a great day.
You too.
Bye.
So next up, we have a presentation from Argenica Therapeutics with the ticker code AGN. To tell us more about their novel neuroprotective therapeutics to reduce brain damage after stroke, I will now hand you over to CEO, Dr. Liz Dallimore. Good morning, Liz.
Good morning. Sorry, I'm just trying to get my video started there. Thank you very much for the opportunity and for having me today.
It's great to have you back on. Let me just pull up your presentation.
Thank you. Thank you. Great. I'm Liz Dallimore. I'm the Managing Director and CEO of Argenica Therapeutics, and delighted to present to you today our business and why we think it could be revolutionary in neuroprotection. Next slide, please. So just a disclaimer of our forward-looking statements. Next slide, please. So this is just a quick sort of snapshot of who we are and what we are trying to do. So as a company, we are looking to develop best-in-class novel neuroprotective therapeutics. So that's essentially therapeutics that can protect brain cells following damage, so say after stroke or other types of brain injury. Our lead drug candidate is ARG-007, and it's shown extensive neuroprotective effects in animal models of stroke. We are delighted always to partner with leading research institutes in Western Australia, the Paraneuroscience Research Institute and the University of Western Australia. And we will be partnering with Limeade to progress our drug into clinical trials shortly. Our drug has patents that are granted in EU, Japan, China, and the US, and those patents are owned 100% by Argenica and free of all encumbrances. Next slide, please. So just a quick snapshot of our capital structure. We have around just over $4 million in the bank, and that's enough to see us through to the end of our phase 1 clinical trial. As of yesterday, we're sitting around a market cap of 31 million. We still have big shareholdings from our founding research institutes in Perrin and UWA. Next slide, please. So I just want to give you a little bit of an overview of why we're going after a neuroprotective therapeutic in stroke initially. Stroke is a huge global issue, and there are currently no drugs available on the market that are able to protect brain cells following a stroke. Stroke is extremely prevalent, so around 15 million strokes every year, and that equates to one person every 19 minutes in Australia suffering a stroke. And the long-term outcomes for these patients are quite dire. So there's often lasting brain damage, there's a high death rate and long-term disability. And we have a saying in the stroke community that time is brain. So once you get that initial sort of area of cell death, you get this cascade out of cell death, which results in around 1.9 million neurons dying every minute. And this is what Argenica is trying to address. We're trying to stop that increasing cell death in its tracks and buy these patients time to get to the hospital to receive treatment. Next slide, please. So just to give you just an overview, if you're not familiar, what currently happens with stroke treatment. So when a paramedic arrives to someone that's suspected of having a stroke, there's very little that they can do in terms of in-field triage. So the aim is to get that patient to hospital as soon as possible. But as I said before, you're getting this increasing amounts of neuronal cell death in the brain. So the longer it takes to get to hospital, you're getting these rapidly increasing levels of cell death. Now, it's really important to diagnose the type of stroke that a patient has had. 85% of all strokes are made up of what's termed ischemic stroke, and this is caused by a clot in a blood vessel in the brain. The other 15% is what's termed as a hemorrhagic stroke, which is a slow bleed on the brain. However, the treatment options for the two types of stroke are quite different, and the drug that's given to ischemic stroke patients to dissolve the clot can actually be detrimental to patients that have suffered a hemorrhagic stroke. So all the while patients are in the hospital getting CT scans, working out what type of stroke they've had, you're seeing these increasing amounts of cell death. Next slide, please. So what Argenica is essentially trying to do is we're trying to develop a neuroprotective therapeutic that can be delivered by paramedics in the field. So increasing the amount, to reduce the amount of neuronal cell damage that we're seeing. If we can give this in the field, we're going to be able to protect brain cells and buy these patients more time to get the treatments that they need. Next slide, please. So how does our drug work? So whilst nothing can protect brain cells from that initial infarct, what we're trying to do is to stop that cascade of cell death that we see from the clot in the brain. So what we've shown in animal models of stroke is that our peptide is able to have multiple mechanisms of action so that we can preserve neuronal tissue and protect that still viable tissue. And what we've shown in 9 peer-reviewed publications of animal models of stroke and 5 in vitro publications is that we're getting really significant efficacy of our drug. We've also got published publications in traumatic brain injury and hypoxic ischemic encephalopathy. Next slide, please. So we've got really encouraging results to date. We've shown that we're reducing neuronal cell death by up to 67% in an animal model of stroke, and that this is lasting out to 28 days post-stroke. We've also shown that our drug does not exacerbate bleeding in patients with hemorrhagic stroke, which is really important. So it means that we can deliver it in the field, regardless of the type of stroke a patient has had. And we're now starting to collect our safety and toxicology data to allow us to go into a phase 1 clinical trial. We've also shown that our drug can be co-administered with the clot-dissolving drug, which is known as TPA, that is given to ischemic stroke patients, so it can be co-administered without any adverse effects. Next slide, please. So we've got some really exciting near-term catalysts as we go into our phase 1 clinical trial. We've just completed our GLP safety and toxicology studies where we're showing no adverse effects of our drug in terms of toxicity and also safety as well at our efficacious doses. We're now just finalising our pharmacokinetic studies as well as we move into the clinical trials. So these studies are essential to get ethics approval to be able to do our first in-human phase 1 clinical trial. We're now also ramping up for that phase 1 clinical trial, and we aim to have ethics approval by the end of Q2, ethics submission by the end of Q2 this calendar year to allow us to start our phase 1 clinical trial. Next slide, please. So what are we aiming to do in our phase 1 clinical trial? So this is a trial in healthy human volunteers, and it's really allowing us to assess the safety of our drug, the tolerability in healthy volunteers, and what that ideal safe dose is to go into a phase 2 clinical trial. Next slide, please. So the trial design is relatively straightforward. We have 4 cohorts coming in and 8 patients in each cohort. This is what's termed an escalating dose clinical trial. So the first cohort will receive the lowest dose. We'll make sure there's no adverse effects on those volunteers, and we'll collect data over 8 days. Once we've sort of shown that the drug is safe in those first cohort, we'll move to the next cohort and so on. So we anticipate that the entire trial will be wrapped up by the end of this calendar year. Next slide, please. So in collecting that data in healthy volunteers, it allows us to go into phase 2 studies. So we'll move directly into phase 2 study in stroke patients, where we'll likely deliver our drug in the emergency department of stroke patients coming in. And again, looking primarily at the safety of our drug in stroke patients with some exploratory data in terms of the efficacy that we're seeing in these stroke patients. It also then allows us to move into other indications directly into phase 2. So those areas that we're looking at in HIE, TBI, and surgically induced stroke. Next slide, please. So we're supported by an experienced team. So myself, and also Dr. Sam South, who's got extensive experience in drug development and a fantastic board with experience not only in drug development, but also in capital markets. Next slide, please. So just to wrap up what we see as the key investment highlights in Argenica, we've got a really clear pathway to clinical trials. So going into our phase 1 clinical trial shortly. We're addressing a huge unmet need, not only in stroke patients, but also in infants suffering hypoxic ischemic encephalopathy, which is a detrimental disease, and we're getting some really good preclinical data in that. We pride ourselves on the preclinical data and the rigor of science that we've put before this company, and we continue to do that as we move into the clinic and explore other indications. As I said, we've already got 24 peer-reviewed publications on our drug. We're supported by an exceptional team, and we've got some really exciting near-term catalysts as we move into the clinic and really try to change the lives of these people suffering a horrendous brain injury. So thanks for listening and welcome any questions.
Thank you for the presentation, Liz. And one of the webinar attendees is actually congratulate you on the excellent job you've done so far, and I do mirror them. And they've also asked, so is the company still on track to start phase 1 during the current quarter? And if so, if phase 1 is successful, when do you envisage phase 2 commencing?
Yeah, sure. So we're working really hard to get our ethics submission in this quarter. The ethics will go to a company called Bellbury. So I think there's been a little bit of confusion as to how that will actually work. So we're not going to hospital ethics, but we're going to Bellbury. They have a turnaround time of, on average, around 20 days. So we're envisaging as soon as the ethics submission goes in, it won't be long till we can crack on with the clinical trial. We aim to finish the clinical trial by the end of this calendar year. And we're already starting to prepare for our phase 2. So we're hoping that we can get ethics submission in for our phase 2 in Q1 next calendar year.
Thank you. And I think there's been mentioned before that there are opportunities to expand the applications for ARG-007. Can you elaborate on this?
Yeah, sure. So what the focus at the moment is we're really interested in hypoxic ischemic encephalopathy. And this is a reduction in blood flow to the brain in infants. So it usually occurs either immediately prior, during, or post-labour. And it's one of the leading causes of mortality and disability in children. So it's a severe disease, and again, no drugs are available to protect brain cells in these babies. We've got some really exciting data, so we're continuing to progress that quite extensively, and having the phase 1 trial completed, it will allow us to go straight into a phase 2 for that indication. We've also got really good data in traumatic brain injury, but also cardiac arrest as well. So a few areas that we're looking at exploring. So yeah, it's exciting.
Wonderful. Well, again, congratulations. It's been great to see your journey. And I also note that Euro's Hartley's actually have issued a spec by recommendation with their latest research note with a price target of $1. So look forward to getting you back on for that.
Yes, thanks very much. Thanks for having me.
Wonderful. Thanks so much. And of course, a copy of today's presentation will be available online on brokerbriefing.com in the coming days. So next up, we are joined by Dr. Mohammed Shakur, the CEO of Archer Materials, with the ticker code AXE. To give us an update on their 12CQ quantum chip development, I will now hand you over to Mohammed.
Hey, can you hear me?
We can. Let me bring up your presentation.
Thank you very much. Thanks. I can see the presentation now. Good afternoon, everyone. I'm pleased to be addressing you today. Just to mention that this presentation is for those of you who are new to Archer, to our existing shareholders, that you would notice some repetition. But for those of you who are new, I would like to really take this opportunity to introduce you to the global scale of opportunity that our technology represents. And to our existing shareholders as well, over the past 2 years, I think the things that we did were somewhat broad. I can confidently say that this is no longer the case. We've come a long way, I'm sure you'll agree, and today I'll give you all a bit of an insight into the wonderful work that Archer is doing. Next slide, please. This is our disclaimer, but look, as a deep tech company, we are by our very nature forward-looking, but the images that you see are all ours. The previous image that was on the title slide was essentially where we do our work, where we operate from. It is a $150 million research and prototyping foundry for semiconductor device development. Next slide, please. So really the takeaway from here is that at Archer, we're well funded into the foreseeable future. And we are really, I mean, this is great because we are long-term value driven. So we have a focus on a few key areas to generate value during our growth. And that involves tech development really at the cutting edge of what you see in the world today in the semiconductor space. It's IP prosecution and also partnerships with other global players, both small and large. But it's really important to make a distinction here that we're not just a company that is working solely on developing a quantum chip. We are a semiconductor company building a number of high impact technologies. We often refer to them as our 12CQ chip, our quantum chip, and our bio chip. But today I'll briefly talk about our flagship 12CQ chip technology. Next slide, please. And some of you, look, may be asking, what are these devices that we develop? Where do we work? I mean, we've just seen a presentation in therapeutic space of life sciences, and now we've switched over to the semiconductor industry, but I'll get to that. But I cannot understate the importance of having access to the talent, to the IP, the technology, and the facilities to do our work. It's probably the highest of high-tech industries, and some of you have been fortunate enough to come along and tour our foundry where we work, the foundry facilities where we work, meet our staff, and even see some of the devices that we build. But if there is one thing I want to remind you of today, and that is that we are one of very few companies in the world developing a quantum processor, and the only one listed on the ASX that's doing so. Next slide, please. And our strategy is quite simple. It involves building advanced semiconductor devices. So I think it's important to acknowledge the industry that we operate in and to put our work at Archer into context. It's one of the largest industries in the world, and it's one of the most important. It's important to put it into context because this industry is somewhat absent in Australia. It's not our traditional industry. And look, although the outlook for the industry globally has seen some short-term supply chain challenges, in the long term, it remains positive. I think, ironically, the short-term challenges further illustrate the industry's importance around the world. But the one thing I wanted to note here is that even though Archer focuses on the initial stages of the industry product lifecycle, the pre-R&D, R&D, development, these are some of the areas with some of the highest total potential value capture in this industry. It's an enormous industry. I mean, you're talking trillions of dollars, and it's second only to the finance industry. So I think the key point here is that really runs contrary to many other industries where you'd expect greater value to be obtained perhaps further downstream. I mean, take mining for an example, where further downstream people can see value, but in the semiconductor industry, there's a lot of value to potentially be had even very early on. Next slide, please. I think first it's very important to let you know then who's leading our development for our quantum chip. It's important because our business is a complex business. This technology and industry is not easily understood. It requires people with a particular set of skills that are very rare. I mean, if you look at an interview recently with the CEO of AMSL, one of the biggest semiconductor companies in the world, they produce instruments and machines for the giants like Intel and others. I think he was asked a question around what are some of the biggest challenges that you see in the industry and for your company moving forward. And he was very frank. He said talent. And so, it's very important here to really highlight the people that we do have at Archer leading our development. I'm proud to say that we do have those people with those particular set of skills that are very rare in the world at Archer. And since the start of 2022, we've been on a recruitment drive. We've been attracting pioneers in the field, and we've been, growing into a team that I strongly believe rivals any in the world. Our progress to date, the devices that we've built, and the patents that we've generated and granted, I think really testify to this, and I'm confident in our ability to execute on our plans moving forward. And in saying that, so please, next slide. You can see the smile on my face because I think the excitement around quantum computing, I really believe is around its promise to, I think, impact almost every sector that is currently dependent on or will be dependent on computational power. The important thing to note here is that to unlock this value, the technology hardware needs to mature. I mean, no one's cracked it. No one's built these quantum computers. We're still early days, right? But there already are real use cases for quantum computing, and the uses in the shorter term are evolving, and they are, on the way to these longer term goals of full compute. It's already happening. However, I will say, and I will, add our pragmatism, our cautious optimism here, is that they're limited in scope. But the last 5 years has seen an extraordinary growth in quantum computing applications. I often get asked how much more powerful is a quantum computer than the normal computer? Is it going to save me time, energy, money? Can do things faster? Look, early on, you can try all you want to compare with superlatives and adjectives and with modern computing. But the reality is they are incomparable. I mean, even at the early stage, the only thing they have in common is the fact that they use the word computing, right? So I'll leave that there because it just goes beyond the scope of this presentation. But you'll see on this slide that each of these sectors could benefit tremendously with the advent of advanced computing, like quantum computing. And as really the solutions the technology offers matures over the next 10, 20, 30 years. And I'm sure you'll agree that number in the top left corner is a big number. And this type of potential penetration into the global economy means that really it's no secret that quantum computing could give nations a competitive advantage, because fundamentally it could address all sectors that is dependent on an increase in computational power. Next slide, please. So for Archer, I guess the key for us at this early stage is in really positioning our technology where there are clear benefits for mobile use, and I'll get into that in a moment, but also with the understanding that this emerging technology is widely expected to solve some very valuable problems. And I really want to emphasize these valuable problems that today's most powerful supercomputers cannot solve and never will. So, just take caution in the hype that you read in the news and the tabloid media. There is an incredible promise and potential with quantum computing. It is still early stage, but the potential for broad scope application is significant. Next slide, please. So quantum physics aside, I think what you need to understand about quantum computing, is its power and potential. And I guess, where does Archer fit into all of this? The power and potential of quantum computing comes from the development of the most critical part of a quantum machine, and that is the qubit processor. It's a device, it's a chip. And importantly, what I want to say is that, Archer is not playing catch up in the world. We're one of very few companies that are developing a quantum computing chip. And technologically at Archer, we do have a unique value proposition that holds up as a world first. And it's that our qubit processor could potentially allow for quantum computation at normal conditions onboard modern mobile devices. This for quantum computing is an astounding proposition. And it's astounding because, your computers already work at room temperature and you already have mobile devices. For quantum computing, this isn't so straightforward. So this is a proposition that we can really back up with years of R&D, and we have already started building our technology. A lot of work has gone into the technology, but some of you may ask, well, how do you accelerate such an exciting development? Well, what I can say to that is you bring on the right talent, you work with the best tech development institutes in the world, you protect your IP, you innovate, you do the science, and you achieve, what many thought was unachievable. And this is what we've been doing at Archer, what we continue to do methodically and deliberately by advancing on our path to developing this technology. And it's incredibly exciting to just be able to be in this position where we are today. Next slide, please. And I wanted to illustrate this proposition because we're a tech company, right? We build technology. This is the technology value proposition at the core of our commercial opportunity, that our technology could potentially enable the widespread use of quantum-powered devices, QPMDs. I'm sure if you go back and you do your reading and you investigate further about quantum computing and the different architectures and the drawbacks and the trade-offs and the resource constraints and how they fill a room, having a mobile-based device that can potentially, enable quantum computation is absolutely astounding. So I'm sure you would agree that this is a competitive advantage that is worth protecting, and that this is a technology that is worth developing. Next slide, please. And we're doing this. We really are. We're doing this by making real quantum hardware and the hardware that could potentially do this. These are devices that scientists only began to imagine or figure their imagination a few decades ago. It's no longer pie in the sky. We've shown this. You can see here in the image on the right-hand side, this is a device that we've put together with our colleagues at EPFL in Switzerland, the Swiss Institute for Federal Technology, Federal Institute of Technology in Switzerland, home of Logitech, the Rolex Innovation Center. Solar cells were invented there. The little on the end of this device is about a 0.5 millimeter by 0.5 millimeter chip that contains what we call a high electron mobility transistor that has been used and developed, and there's other circuitry on there that we use to detect quantum information at room temperature in our what we call qubits that are in there, but they're a trillionth of a liter in size, so you can't really see them. This kind of technology is the kind of technology that's used in your mobile phone and your mobile antennas, right? So we've taken already mobile compatible technology and used it to detect quantum information at room temperature. This is absolutely phenomenal. It's a world first, and it's a result, like I said, over a decade of world-class R&D. What you see here is really a primer for this transformative technology on the road to our ultimate goal. It's direct proof that cuts through the hype surrounding quantum computing, and it really supports this exciting possibility of QPMDs. And it's given us at Archer the confidence to say that we can really do something special here. So just in conclusion, just the next slide, it's my last slide. Just in conclusion, what I want to say is that Archer is building itself into a semiconductor company. That is our strategy now and going forward. We have really grown over the last few years with a solid development track record. We've grown, our team. We have access to the technology, the funding, the patents, the IP, the facilities, the infrastructure to really confidently and competently, and I would also say pragmatically, move forward. And really, with our focus, it means we've had a clear strategy, and we have a clear strategy that we've been executing over the last few years. Our growth is not a result of overnight success. This stuff takes time. It's difficult work, but we are doing it. It's the result of really the quality of work that we're doing, the quality of management executing on our plans. It's a world first, right? You can't Google the answer here. And really the quality of the organizations that we work with. I know some of you have questions around timelines and commercialization, but look, we've set commercial roadmaps for our technologies, and we are at the point of where we need to be right now. You may consider these areas on this slide as potential news flow catalysts for those of you in the investment community. But ultimately, I hope today in this brief time, I've showed you that what I can say is, I guess, at Archer, I believe that we have a very bright future ahead of us. And so I hope I've conveyed to you today some of the excitement of what we're doing and how things are really coming together at Archer and how eminently worthwhile it is to pursue such an endeavor. So on that note, thank you very much, and thank you for your attention. And I'm happy to take some questions from those in attendance today.
Mohammed, as always, thank you for the great presentation.
Was I on time? Did I keep the time?
You were on time. Very well done.
Fantastic.
We've got a few questions for you, so I'm going to jump into them now. So can you talk us a little bit more about the competitive landscape in the sector and probably more so about the advantages of Archer's technology? Yeah,
so look, in this sector, it's all early days, but you'd be surprised just how many Aussies are leading the way in the world in quantum computing. It's wonderful. I mean, you have the team at IBM led by Jay Gambetta, who builds the cloud-based superconducting quantum systems, like the most advanced quantum machines on Earth today that we have access to at Archer. You have others in companies like PsiQuantum who work on photonic-based quantum computing systems. Others in Xanadu, based in Canada, again, Aussies, in the photonic space. In Australia, we have companies like Silicon Quantum Computing and others that are emerging, spinning out of universities and doing some wonderful things in that space. But they all come with their trade-offs, and ultimately, it's the materials that are the tangible physical basis of all these technologies. They determine the intrinsic properties of what you can and can't do with your technology and how you can and can't scale your business model. Take, for example, superconducting-based qubit systems. You need cooling systems. These are large refrigeration systems using helium that fill a room. They're great for cloud-based quantum computing, but can't fit in your phone. So I guess to say there's room for all to play in the space early on, and Archer is really setting itself up with its technological advantages that we've protected through patents. We've published in some of the best journals in the world. They really demonstrate the ability to operate, the potential to operate these materials to process quantum information at room temperature onboard modern devices, which is a real paradigm shift in the field. It's a healthier ecosystem out there.
Brilliant. And look, you did mention this through your presentation, just about strengthening those partnerships, but is there an opportunity for further partnerships with sort of big tech or otherwise?
Yeah, look, I think we're not going to go build a semiconductor foundry, right? We have to understand, if we go back to that initial slide where I showed, we're not trying to, be everything in the supply chain. It's very expensive to build these foundries. Like a foundry to purely kind of manufacture chips today costs on upwards of $10 billion, right? So we would rely on strategic partnerships as we progress through our development to partner with the right organizations to get our work done and to actually build our devices and demonstrate they work. And this is what we've been doing and what we'll continue to do moving forward. So it's really exciting stuff.
And Mohammed, so what sort of primary market will Archer be targeting once commercialized?
I think you can let your imagination run free here. When they first developed, when Intel back in the 70s, I love this question. I find that extraordinary as well. But what I can say to those who are asking this question is, go back and read Intel's annual reports from the late 70s and early 80s. Pretty cool. Apart from the really cool images back in the 70s and 80s, what you'll find is there are some parallels you can draw where, I think Intel at the time started off, they had their memory and their little microprocessor was on the side, focusing on calculators, right? And then quickly pivoted into more broad scope general use. To tell you the truth, I don't think anyone in the field actually knows exactly what quantum computing is going to be used for in terms of general purpose, but there are some clear benefits where in mobile use it would make sense, right? You saw that kind of image where we had application spaces in autonomous vehicles, in the need for onboard kind of low latency, applications. But the reality is those applications will stem from the people developing those algorithms. We built the chip so the people making the algorithms can help with the end user and the subsequent applications. But we see a broad scope potential for the use of mobile-based quantum computing devices.
Thanks, Mohammed. And just finally, and I know you did touch on this, but what news flow can shareholders look forward to over, let's say, the next 3 to 6 months?
Yeah, look, I mean, if you look back at Archer's history and what we announce and how we go about our work, you'll see that we're not a company that is built off the success of just a single result, right? There's a lot to look forward to at Archer, is what I'm trying to say. We have a multi-pronged approach to development at Archer. It involves the early stage commercialization through the prosecution of patents and IP. We've got our patents through in a number of jurisdictions in the world, but we have patents still pending in Australia and Hong Kong. Our technology development, I really cannot emphasize this enough. We're a technology company. Without the technology, you have nothing, right? So really that technology development and making those step changes in tech development towards our ultimate goal. And our, working on strengthening those strategic partnerships and building new strategic partnerships around the world within the supply chain and semiconductor industry, but also broadly in the quantum ecosystem in Australia and around the world.
Well, Mohammed, thank you so much for joining us. We've been following the story for quite some time, and we look forward to having you again on Broker Briefing soon.
Thanks for having me. Thanks so much. Bye-bye.
And thank you all for joining us today. Recordings of today's presentations will be available online in the coming days on both brokerbriefing.com and YouTube. We look forward to hosting you again soon.